BOE holds, does not give an inch. The BOE held its policy rate at 5.25% as expected by economists and markets. Guidance on the time to be spent at the peak was left unchanged, and the door was left equally open to another hike if needed. The 6-3 vote split may have prompted a leg higher in the GBP and a small sell-off in gilts that were carrying a strong rally from the Fed's decision yesterday, and as some expected a larger 7-2 consensus. Today's decision does not change our view that the first BOE rate cut will come at the June 2024 meeting, for a total of 125 basis points by end 2024. As far as markets are concerned, cut bets were initially pulled back to later end up virtually unchanged at 115 to 120 basis points in cuts expected by end 2024. ECB and BOE reluctant to join Fed in pivoting toward rate cuts. Europe's central bankers are in no hurry to join the US pivot toward interest rate cuts, even as investors keep insisting that they'll need to embrace easier monetary policy soon enough. In the wake of Federal Reserve Chief Jerome Powell's signal on Wednesday that officials are turning to focus on reducing borrowing costs, peers from Frankfurt to London declared that further slowing in inflation can't be taken for granted. Whatever financial markets may be betting, they signaled that easing isn't on the agenda for now. We should absolutely not lower our guard, European Central Bank President Christine Lagarde told reporters, while her Bank of England counterpart, Andrew Bailey, observed that there is still some way to go in the fight to tame consumer prices. Asia Morning Bites. Global macro and markets. Global markets, U.S. Treasury yields continued their downward march on Thursday, taking the 10-year yield down to 3.921% after a decline of 9.6 BP. We haven't seen 10-year yields starting with a 3 since July. There was a smaller decline by the 2-year yield of 3.8 BP. Eurozone has been given a further lift as U.S. yields declined, rising to 1.1005. This has also dragged the AUD up above 0.67, cable is up at 1.2771, and the JPY has fallen to 142.07. Other Asian FX has also strengthened, except for the INR, which appears to be de facto pegged these days. USD has dropped to 7.1119. The THB and KRW were the strongest of the other currency pairs. The THB gained more than 2% yesterday and the KRW rose just shy of 2% to take it to 1,295.30. Equities are still enjoying the decline in yields, but gains were much more modest on Thursday. The S&P 500 rose 0.26% and the Nasdaq rose 0.19%. Chinese stocks had a mixed session. The Hang Seng gained 1.07% while the CSI 300 fell 0.52%. It is down 13.42% did. UK consumer confidence rises to its highest in almost 2 years. UK consumer confidence edged higher in December as households looked forward to lower inflation and a slightly improved economy in 2024. The market research firm GfK Limited said its measure of sentiment increased 2 points to -22, the highest level since January 2022. The negative reading still means household confidence is decidedly shaky. The increased optimism was seen across all of GfK's measures, including respondents' personal financial situation, the general economic situation, major purchases and savings. Despite the severe cost of living crisis still impacting most households, this slow but persistent movement towards positive territory for the personal finance measure looking ahead is an encouraging sign for the year to come, GfK's client strategy director Joe Staten said in a statement Friday. Thank you.